Hi folks, welcome back. Hope you are doing well. Today we have a lecture of ICT A to Z beginner series. So in the last video I teach you the example of market structure shift and wallet swing, and today we have a note 14 lecture. We have one thing that I missed on this series, that is what is liquidity and where it reside, ICT internal range liquidity and external range liquidity. Before we jump into the next lecture, we should know and understand what is the liquidity and where it resides. The most important part, where you are after that thing you are going to see your setup and you are going to focus on your entry model. Let's jump into the video. So before I start in this diagram, you should watch all these series. Okay, I already make a playlist on my YouTube channel as the name of ICT A to Z beginner series. Okay, and I have Urdu channel name A Quick Money. I also write here, and I will also explain you in my Telegram channel. This is my YouTube channel name in Urdu and Hindi. If anybody is coming from Asian country and don't understand English properly or not understand my accent of English, he can join my channel as well. So price is seek for only two things: a liquidity. So we have a two type of liquidity: internal range liquidity and external range liquidity. Okay, so what is the liquidity? A liquidity area where a buy and sell order is reside, that will execute as a retail idea, that price action, everybody came ICT after go through the price action, like the patterns, a wedge, a doji candle, and like that. Okay, in that stuff, many people consider this is a resistance area once the breakout happened. So in breakout area there is a many buy stop, and in the downside in the support area there is a many sell stop. So it's mean that the idea behind the retail idea, that if market go upside, the buy order is executed. So in ICT term, this area is called a liquidity. So that is external range liquidity. Okay, where the retail people think that is a support or resistance, that's called a external range liquidity, where you can watch a swing point of any internal or external is a external range liquidity, and inside there is a fair value gap that called a internal range liquidity. So liquidity, what is liquidity? A area where the buy stop or sell stop order is available, or price seek for to rebalance the price. Internal range liquidity, which called an imbalance, a fair value gap imbalance. Okay, so I hope you understand this simple concept in this simple time. Okay, so let's jump into the chart and I will show you example. Okay, these thing, the internal range liquidity and the external range liquidity, a swing point, I already teach you this thing in my previous videos: a fair value gap, market structure, a wallet swing point. Okay, if you watch that video, you will understand clearly that one. Okay, if you don't, please go and watch that one before you come to see this video. Okay, so in internal range and external range, you can also determine your buys and a narrative of the daily your trade setup. Okay, so we are in the daily time frame on a gold. You can apply this every market. Okay, and you should do practice after you watch a video. Okay, so as I told you, okay, price will go for external range liquidity. Okay, then seek for internal range liquidity. It can be a fair value gap, minor, whatever. Okay, and then after that, price seek for external range liquidity but fail to displace. Okay, if it's fail to display, then price have a liquidity for, you see here. Okay, after that we have internal range liquidity here. Okay, but price didn't come and break for another liquidity that create here. Okay, internal range liquidity that filled here that displace, and after displace that thing as work for a inversion fair value gap. As you seen here, price touch and give you the external range liquidity. Okay, a swing point is the external range liquidity, and a fair value gap, inversion fair value gap, is your internal range liquidity. Okay, so I told you about fair value gap and inversion fair value gap in my previous videos. Okay, here you see we have a huge run. Okay, after a huge run, what we have here, a internal range liquidity which is also imbalance, here also, and here also. So after internal range liquidity has been tapped, where it's going to be target? The external range liquidity. The external range liquidity or any swing point that are as per your bias. If bullish, you will see a swing point for bullish. If you are bearish, you will see a swing point for bearish. After that, where it will going to seek internal range liquidity, a fair value gap. Internal range liquidity, then it's going to external range liquidity. Sometime when it's not work, because you know the market is rigged. Okay, it's totally controlled. When the market is going to be choppy, okay, if it's going to be a choppy market, then you will see many times the price will fail this idea. Okay, so don't worry about it. Once you practice that one, your win rate will be increased. There is, you know, in this market there will be a no 100% win rate. So once you're going to start on this, you will be understand the things. Okay, so external range liquidity, we have a fair value gap. Internal range liquidity, seek for external range liquidity. Okay, from idea like this, okay, from idea like this, you will determine your daily buys, weekly buys. Okay, if we are going to a weekly chart, you will going to understand where could be the price go. As you seen here, the price is choppy here, right, in the few weeks. So here is no clear buys is determined. So what you will do then, you will wait for more price action. Okay, you will change your market. If you are not a gold trader, change your market, change in check in another market. As you seen here, once price took out the previous liquidity, okay, once it took out the previous liquidity, where it's going to go? Internal range liquidity, right? That was here. Price come. As you see, the wick is not a price action. A body is a price action. If it was a displace and close below, the these fair value gap become an inversion fair value gap. Okay. So now price go upside, and there is a wick. Okay, where as I also explained you a consequent approachment of this wick. Okay. So but price didn't reach here as well, and didn't reach to the external range liquidity. So we have to wait for more price action. The price is going to choppy. Okay, it's go upside and come back and again reprice the area. See what I said? Reprice. Not it mean by that once the price touch here, the second time it will not come. It will come and it can be repriced. Okay, we are anticipating to the price. We are not reacting on the price. Okay. Here, as you seen here, in the daily time frame, we see also weekly came. Then you will understand displacement, upside, external range liquidity, internal range liquidity. That's all. You have to do, and just you will go on a weekly time frame and practice on it. Okay. Understand what I said? Internal range, external range. See what is the clear price action. What is the smooth price action? As you seen here, here is the choppy market, but you can trade, you can took a trade on these candles as well. Okay, on your lower time frame like 1 hour, 4 hour. So these are, you have to practice. Okay, because I want to explain these things before I jump into the next lecture, that is the ICT 2022 module. Okay, so on that, the liquidity is the most important, and in all ICT concept, the liquidity is the main focal point before we jump to any our trade setup. Okay, I hope you learned something from this video. If you are new to our channel, make sure you subscribe, and if you didn't join any good breaker, I will put link on the description. We have a zero commission broker, zero spread, and a high leverage, a regulated broker. Okay, make sure you join our Telegram channel where I put a free signal. Until next time, be safe.